Hello, family. What's going on? This is Maniwa. Now, before we go ahead and get started, make sure that you leave this video a like because every like helps the channel to grow. And ahead, hit that subscribe and notification bell so every like and subscribe really go a long way. So, with that being said, let's go ahead and get started. So, family, today I will be also doing the cash flow statement. So I will start preparing the notes first, then I will go through the cash flow statement. So if you can check here, I have the question paper with me, and we have been given the statement of financial position and also the statement of comprehensive income. So if you can check the required, they want us to prepare the statement of cash flow, also the notes of cash received from client, and the cash paid to suppliers and employees, and also distribution and taxation paid. So I'm going to start with the notes before I can proceed with the statement of cash flow. So family, this is our required. So they want us to draw the statement of cash flow. 70 marks the cash received from clients and the cash paid, and also distribution and taxation paid. So the cash flow statement, remember on the first activity I did the cash flow statement, but I only did the notes. So here I will make sure that I'm going to do I'm going to do the notes, and also I'm going to complete the cash flow statement. Remember the first activity I did the cash flow the notes only for cash flow statement. I did not complete the cash flow statement, but here I will make sure that I'm going to do the notes and also the cash flow statement. Hope that we're on the same page. So as you all know that I'm always using the spreadsheet. So this is the spreadsheet that I'm always going to use to draft the activities that we are doing. So I will start with the cash received from customers. Note cash received from customers. So I'm going to grab my pen so that I can draw the note. Okay, so something like this. Alright, so guys, the cash received from customers, I'm not gonna explain why we are preparing the cash received from customers when you are dealing with the cash flow statement, because you have the knowledge from your high school level, N4, N5, and also N6. So I'm not gonna explain why we are preparing the cash received from customers and why we are entering sales and whatsoever. So the first item will be sales. So we're going to check on the additional information, but normally if we have been given the statement of financial position and the statement of comprehensive income, obviously the sales amount is going to be reflected on the statement of comprehensive income, because that's our income statement. So we're going to check the income statement. Then if we have not been given the sales on the income statement, then obviously the sales is going to be on the additional information. Okay, so let's go through the additional information and the statement of comprehensive income and check if we don't have sales amount. Okay, so let me go and check our statement of comprehensive income. Here, the statement of comprehensive income is for the year ended 29 February 2016. We have the first item sales. So I'm not going to check the additional information if there's any additional information that includes sales. Why? Because we have the final amount for sales. So even though if we have the additional information that affects sales, I'm not going to consider it. Why? Because we have been given the final amount of sales, 440,000. So 440,000 is going to be the amount that is going to be reflected on the cash received from customers as sales amount. So I'm going to take 440,000 and make it our sales. So I'm going to have 440,000 440,000 is our sales. So the next item to be indicated under the cash received from customers will be changes in debtors. So with changes in debtors, we're going to check whether the debtors control amount or the trade receivables amount has increased or decreased. If the trade receivables amount or debtors control amount increased from the previous year, obviously is going to be the outflow of cash. But if it decreased from the previous year, it's going to be what? The inflow of cash. So, but I prefer you guys not to write the changes. You better write whether it's decrease or increase. So I will erase changes. So let's go to the question paper and find out whether the debtors control amount has decreased or increased. So here we have the statement of financial position for the year ended. So under the current assets, that's where we're going to find the changes in debtors. So looking at our statement of financial position, we have the previous year and the current year. So we're going to check the debtors control amounts for the previous year and the current year. So looking at the statement of financial position, we have the debtors control for the previous year is 6,120 and the current year is 56,920. So let me try to highlight so that you can all see the amounts that I'm talking about. Okay, but here is the amount for the current year, and also this is the amount for the previous year. You see it highlights everything, but I hope that you all can see the amount for the current year is 56,920, whereas the previous amount was 6,120. So this tells us that no, the debtors control amount it increased from 6,120 to 56,920, but we are going to find the difference in order for us to determine the changes in debtors, right? So in order for us to find the difference, we're going to take the current amount, the bigger amounts, and with less the smaller amounts. So 56,920, we're going to less it with 6,120 to get the difference. So let me go and indicate the amount on the cash flow, no, on the cash received from clients. So I'm going to, because we have determined that it's an increase, so I'm going to write an increase here, increase in debtors. So we're going to indicate inside the brackets that we took the amount for debtors control of 56,920, 56,920, and we left 6,120. So we left 6,120. So guys, you know that I've been trying to use the method on how to get the correct amount using the calculator from the spreadsheet, but I failed to do so. So I'm just going to use my own calculator. So please also do confirm the calculations. So my calculator gave me 5,800. So because it's an increase, so this one is going to be an outflow of cash. It's going to be indicated inside the brackets. So there is no other item that should be included under the cash received from customers. So if you ever see yourself including other items under the cash received from customers, I think you are going to have a problem. There's no other item that should be included under the cash received from customers, only two items. So the difference, we are going to take the sale amount of 140,000 and less 50,800. So it gave me 389,200. So please do confirm. So I'm also going to prepare the cash paid to surplus. So cash paid to surplus. I'm also going to grab my pen here, so I'm going to draw on the note for cash paid to surplus. Okay, same applies to cash paid to surplus. The first item that we're going to have is going to be the sales amount. So the sales amount is not going to change, so it's going to be 440,000. So here we're going to need the profit before, profit for the year, but profit for the year we only record before. So I'll write BF, but it's before, right? So we are going to record the net profit before. So it's going to be indicated inside the brackets. But firstly, let's go to the additional information and check the amounts for the net profit before taxation. Okay, so let's go through the income statements. That's where we are going to find our net profit. Yes, here we have the net profit before taxation. Let me highlight net profit before taxation. So with the amount of 55,760, so that's the amount that we are going to take as our profit for the year when we are preparing the cash paid to suppliers. 55,760. So like I said, that the profit for the year must be indicated inside the bracket, so I will indicate inside the brackets 55,460. So 55,760 must be indicated inside the brackets. So the third item that is going to be needed here is going to be the expenses for the year. So here the expenses for the year must be indicated inside the brackets. So let me grab my pen, and here we're going to have a line like this. So the expenses for the year also is going to be indicated inside the brackets. So we're only going to find the difference between the sales amount and we less the profit for the year. So my calculator says is 384,240. So the expenses for the year must indicate it inside the brackets, so I will put the brackets. Here we go. So here I'm going to list, after the expenses for the year, I'm going to list all the non-cash items. And on my previous video I told you about all the non-cash items are those items that cannot be converted into cash, like depreciation, provision for bad debts, interest expense, dividends received, what else, those are the non-cash items. So we have many non-cash items, so but we are not going to list the non-cash items that we know here. No, we are only going to list the non-cash items looking at the additional information. The additional information is going to tell us that no, we only have depreciation as our non-cash items, we only have the interest paid as our non-cash items. You get what I'm saying? So we're going to check through the additional information to check what kind of non-cash items we have here, so that we can reflect them under the the cash paid to suppliers. Here we go. We are on the statement of comprehensive income for the year. So looking in the statement of comprehensive income for the year, if we can go and check under the other incomes, we have the interest received amount. The interest received amount of 4,000. So interest received amount of 4,000 is also going to be the part of what, the non-cash items. So it's going to be 4,000 because interest received is an income. When we are dealing with the cash paid, it's going to be indicated inside the bracket. So looking under the expenses, we also have depreciation of 19,408. So 19,408, let me highlight. So 19,408 is also going to be the non-cash items. But because depreciation is an expense, when you are dealing with the cash paid to suppliers, it's not going to be inside the brackets, but inflow of cash. So we also have the interest on members loan. So interest on members loan is the interest on loan. So the interest on loan is an expense. So when you're dealing with the cash paid, it's not going to be inside the brackets. Same applies to loss on sale of an asset. Loss on sale of furniture is an expense. It's not going to be indicated inside the brackets. We also have what? The salaries to members. Salaries to members is an expense, not inside the brackets. Are we all together? So I'm just going to list all the non-cash items that we have when under the cash paid to suppliers, and also the amount. So I will start with the interest received. So interest received is 4,000. Remember, it's going to be outflow of cash, 4,000. So I've seen depreciation, and the salaries to members, and also the loss on sale of furniture, and the interest on loan. So I'm just going to find the amount for depreciation. So let's deal with it. I'm going to start with the depreciation amount is 19,408. So it's 19,408, and then members salaries to members is 96,000, and the interest on loan is 20,712, and the loss is 10,000. So I'm going to take the amount the way they are. Then now I'm going to take the amount on the cash paid to suppliers. So the depreciation amount is 19,408. So the salaries to members is 96,000, and the loss is 10,000, and the interest on loan is 20,000, 712. So I think, yeah, we're done with the non-cash items. So these are the non-cash items that we have. So we're going to find the changes in inventory. Then let's go through the additional information and let's check the. So in this case, let's go through the statement of financial position. So under the current assets, that's where you're going to find the inventory. So we have the previous year and the current year. So the inventory amount for the previous year, it was 15,000, and the current year is 19,760. Obviously we have an increase when we're dealing with a stock, right? So an increase, so we're going to have an increase. We're going to find the difference between 56,920. We're going to less it with a 6120. Am I doing the correct one? No. So the current amount for inventory is 19,760. I'm going to less 15,000. So the difference is 4760. So it's 4760. So because we know that we have an increase, I'm going to write the increase here. So I'm going to indicate inside the brackets to show that I took 19,760 and I left for 150,000 then the difference we got, because it's an increase, so it must be indicated inside the brackets. It's going to be 130. No, I think it's 150,000, right? 50,000. So it's not gonna be. So it's going to be. Because it's an increase, it's going to be negative 4760. So here we have amount. So we're going to find the changes in payables. So the changes in payables, we're going to find the changes in payables under the balance sheet, the statement of financial position, under what we call the current liabilities, because that's where the trade payables is. So we're going to find the changes. So here we are on the statement of financial position. So the current liabilities, we have the creditors amount for the previous year. So the current amount is 36,660, and the previous year is 2,400. So with the creditors, it increased. So with the creditors, if it's an increase, it's an increase, it's an inflow. If it's a decrease, it's an outflow. So with the creditors, whether it's an increase, must be inflow, whether it's an outflow, must be a decrease. So with the creditors, we have the 36,660 for the current year, and the previous amount we have 2,400. So it increased by 34,260. 34,260. So I'm going to indicate inside the brackets that I took 36,660, then I list 2,400 to get 34,260. So in order for us to get the total amount for the cash paid, we're not going to start from the sales amount and the profit for the year. No, we're going to start from the expenses for the year. So here we're just going to take this amount. I would like you to start with the positive first, then you can less the negative. So we're going to start with a 19 for depreciation. We're going to add salaries, we're going to add loss, we're going to add interest, you're going to less the increase in inventory, you're going to add this one for payables. So we're going to also less the interest received and also the expenses for the year to get the total for cash paid. So here is an increase. Let me write increase. I forgot to write increase. So start with the positive in order for us to get the total. Okay, so my calculator gave me negative 212,620. I would also like to confirm with your calculators. So I'm also going to prepare the notes for dividends. Is it distribution or dividends? Also going to check. So I'm also going to prepare the notes. So is distribution and taxation. So distribution and taxation. So let me grab my pen. So I'm going to have something like this. So this side I'm going to have the taxation. Yeah, something along this. So here I'm going to record the taxation. So this side we're going to have the distribution. So here we're going to have the balances at the beginning of here. So here we're going to have the amount reflected on the income statement. So here we're going to have the balance